The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting for Larry Pesavento until Larry gets back. I'm doing today's show. I'll try to do tomorrow's show as well. I am going to go straight to the commodities because, in fact, I believe we've still got Frank from Louisiana holding on who wants to look at coffee. Yes, hi Frank. Okay, thank you so much for holding. I appreciate that. I know it was a long wait. I'm going to do this. I'm going to go right in now, and I'm just going to say, Basil Chapman, I'm usually the host of the Tiger Technicians Hour Monday through Friday, 11 o'clock till noon, and then Larry comes on Monday, Wednesday, and Thursday. But in this particular instance, I'm doing 2 hours today. And Frank had called me up in the earlier hour and asked me about JO. JO is in fact, and I think it's an ETN that trades, that essentially tries to trade coffee. But what I said that I would do is that I've done a lot of work on coffee. I don't trade these. The only futures I trade are the E-minis. Larry trades all over the show, and he does, he's in the oils, and he's in the bonds, and he's in the E-minis, etc. But I do not do that. So I'm doing it purely theoretically. And what I wanted to say is that coffee, the exact pattern that I was looking at on the upside in a particular chart, I love to look at chart patterns repeating in various, I'd even call them sundry. They are disparate charts, in other words, stocks or commodities, but the patterns remain the same. I was looking at a chart earlier on, but I got a call and I'd written down it incorrectly. I put EXR instead of ERX, and the EXR is in fact a monthly chart. Now look at this. Look at this particular. In fact, I don't have time. I would have put them. I would have inverted the two. Look, this is on the way up. It is exactly the same chart as the continuous pattern of KC, which is coffee. Look, there it is. It's upside down. The same way as I'm beginning to see some topping action in that chart of EXR, which was a storage company. So I'm beginning to see some signs of at least an attempt at a rally in coffee. Now, it has to do with beans, it has to do with weather, it has to do with all sorts of things that I do not get in. Andy Hecht is also just a fantastic person on the Commodities Show on Tuesday and Thursday, who'd probably be able to give a great deal of information. I'm just doing the chart pattern. And the fact that the weekly chart in the continuous weekly is showing that the low of 121.50 last week with a round number high to 127 high, and today's low, this week's low of 121.50, and this week's low of 118.35. I keep misreading it because it's so faint. 116, that's what I meant to say. I'm sorry. On the 23rd of August, the week of the 23rd, coffee continuous contract went to 116.35. This week so far, the low is 116.60 with a very nice candle. The MACD starting to improve. Stochastic has a nice divergence. It's still scary, but it's a nice divergence. So now I come to the daily chart and the Chapman wave methodology. Let me just go through this for those of you who are new to my work. I do something very simple. I look at chart patterns. I look at bars. I use candlesticks before other information, but if I had to just look at the bar, let me go to slide number 11 on this CD introducing the Chapman wave methodology. So I'll just zip down to 11. There it is, 11. You can look at bars, and you just see higher highs and higher lows. But if you start to add the lettering of the Chapman wave, uppercase letters on the upside, lowercase letters on the downside, look what you get. You get your peak D, which is the fourth highest peak. That's what you want to see. You can even go to an F, even a G. So now let me go back to the story. In this particular instance, coffee made a peak E in the continuous contract on the 18th of July. It's pulled back to trough. I haven't done the trough, so let me do the troughs lowercase. I hope it types. Yep, there it is. A, B, C, D. It has a big rally of A, to B minus. That's the H pattern that I always talk about, the dreaded H. It goes below. Now it has to to be able to negate the negativity of this pattern. I have to get a buy signal that goes to a buy mode in the technicals as the price moves higher. Your entry this morning in the contract itself, that is what, KCU? KCZ?
No, JO.
Oh, that's right, JO. Then we go back to that. You're doing the ETF. In the ETF, represents, oh, look, it's exactly the same. Oh, this is a good one, because sometimes, like, corn doesn't have quite the same, CORN doesn't have the same pattern exactly as the corn contract always. In this particular instance, we get exactly the same. Oh, we just missed it. We did not get that C to go to a D, so it goes to C minus. All right, I thought it was the same. You see, the ETFs don't trade throughout the night, but the contracts do. So this one just missed it. So what price are you in?
About $24.50.
$24.50. So you actually got in a couple of days ago.
Right.
Okay. So it's, in this case, it's not such a big deal that it went down to 23.70. Let me just see what the low was.
About 23.70 range.
Yeah, 23.72. That's not such a big deal. So, okay, now I also understand that you have a little bit of patience and you have a little bit of temerity there to be able to hold the contract if you're wrong. But here's what I'm going to suggest. Another move down to the 23.60 area, underneath that 23.74, it's a 23.72 low. I'd say to you, you know what? It could, in fact, turn right there. But I would not take too much risk. At least on part of your position, I'd have a stop. A break under 23.72 in the next day or two. I'd probably say take some of it off. You can always get back in. If this is going to have a trend change of significance, then your JO, which is the iPath, Dow Jones, AIG, Coffee, ETN. Yeah, it's an ETN. So they don't have, this is a paper product. There is no backing of it in terms of buying the product. So here's my recommendation. I think your entry at 24.50 obviously is just a tad low, but 24.20 is the 9-period moving average. 24.51 is the, I believe, I need to check that. Oh, it's a little bit too faint. I think that is the 20. I'm just going to check it. Is the 14-period moving average. That's what it needs to get to. And I can tell you right now, if there's a move to 24.50, and then for whatever reason, if there's a gap from the 24.66 high of the 20th of August going towards close to the 24.98 low of the 19th, for the first time, I would suggest that this is a potential for a move that might not have huge upside in the weekly chart, but on the daily chart has the potential to start climbing to the 25s. That's what you want to see, right?
Right.
So here's what I'm going to, someone in the den said, had a good idea. He said, options might be a better way to play something like a JO, and I tend to agree. I don't know if you use options or not, but
yes.
my think you do use options.
Yeah.
Okay.
Yeah. There's not a lot of premium on that on the contract either.
Okay, and I suspect that there aren't even that many options, right? I mean, it's probably a low volume option trade.
Correct.
Yeah. So you know what? Stay with us for now, and I'm going to suggest that today is Wednesday. I'm going to make two suggestions. One is either next week on the options hour, call and ask about the potential for the options trade here, looking at the long side, if you're still in the trade, that is, because you might want to be able to carry both of them. That's number one. Number two is if tomorrow afternoon, I would call Andy Hecht, tell him your situation, tell him what you've got, and ask him his recommendation, because he trades these things. I believe he trades these things. I don't. I'm just theoretical. I don't have the history behind me to say that I know such and such always happens. I can't do that. I can't even tell you which month to be trading. Here's my recommendation. Stay in the trade. Have some kind of a stop under today's low, just as a kind of a warning, 23.89, to say, gee, you don't have to take it, but say around here, if it pulls back, I don't want to see another failure. I would much rather see a test above yesterday's high of 24.34, and then I've got a little bit of comfort, and that's the way I think you should feel. And I've got a nice divergence between the stochastic as it stands right now. I've got a very nice divergence in the MACD between the low that was made recently and any other time in the MACD. So that's saying to me there's internal strength. It needs to be followed through with price movement. So stay in the trade. Treat it as just a short-term trade. Don't get married to this short-term trade. I wouldn't even add to it, but I would considering adding to it if by Thursday or Friday this thing is holding and has started to test the 2460s and hasn't broken the 2395 area. And then maybe give me a call and see what's happening. But I think you're in for timing. Your timing is just going to be perfect, or once again, it's going to be early. But I'm just telling you now that monthly chart, this is the first time I'm beginning to see just a little bit of a sign because of the weekly that says if by Friday afternoon, JO, that's the iShares of the coffee contract, can trade into the 2460s and higher, close there on Friday afternoon, that'll be the first inside bar that I'm looking at that says good. First, it's a start. It's the first start out of a three-step process. So monitor it. Yes.
Basil, do you think you can withstand a downtrend in the market, though, if all the Dow and the NASDAQ?
No, I think coffee is independent now. My 120-minute chart says trying to stabilize here. It's going to be in a different... I would not treat coffee as a market participant, not right now. But okay. You know what I would do? I'd be looking at it, and I'd be looking at staples at the same time, because if it starts to rise over a period of a couple of weeks, then not staples, I'm talking about Starbucks. Starbucks might be impacted. So this is all. And another hint in the den, you can sell near-term out of the money, put spreads to fund at the money longer dated calls. Yeah, that's all the stuff that I think if you want to talk to Andy Hecht about it, that's probably the best thing. I like it technically as a starter position. Hey, good luck. Keep in touch. Let me know what's going on. Thank you, Frank. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. So I'm looking, you just mentioned the one I want to talk about, which is CORN, corn. And I'm looking at the daily. It looks like it's still like a peak D. It just bounced off the 9 EMA. What do you think?
Okay, so the low 34.06, 34.05. So I'm going to put, just because it's gotten to a C, I've got it as peak C. Peak C. Folks, we're looking at corn, CORN. But it's not corn. It is the contract that trades. This the Tecreum Corn Fund. I never really know how to pronounce that. Let me just check that out. There we go. Okay. Now there are a couple of things that are happening here. I'd like to talk about this particular corn the ETN. It's the Corn Fund. I believe it's like an ETN. I'm going to talk about that. I'm also going to look at corn. And then after that, we're going to take some time and I'm going to go through the NASDAQ with one of our callers, and I'm also going to look at the NASDAQ important stocks. I'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians. Our host is now right here at this hour helping Larry out. So Larry perseverance to trade what you see, and we are looking at the charts to be able to help our callers trade what they see. And we're looking at the corn contract, continuous contract. We're looking at it for Mark and Fort Collins. He's got CORN. That is the corn. It's the fund, the Tacreum fund. Now I'm looking at the continuous contract, the 120-minute chart. Made a beautiful peak E top, then a peak F. Most recently, it's been treating the 200 period moving average. This gold one. If you're looking at Tiger Technicians, if you're looking at the charts on Tiger TV. And now what's even more important is stream not found. My stream. Whoops, I didn't get the streaming. Need to just check on that. So what I'm looking at is that the 200 period moving average support is in fact going to turn into support here because the stochastics are right at the point where it should turn at 7%. MACD's trying to flatten out the histogram, those red lines. They're improving, but this is what I'm looking at now. So let's see. Mark, you're in at what price? Are you still in?
I'm not in at all. I was looking to play it maybe for a 2-point. I'm looking to play it for 2 points to make a peak D or 2 to 3 points, and possibly playing a call option a month or two out. But I'm not going to go for it if you don't think it's a good idea.
Well, I tell you what I'm looking at here. The pullback yesterday was a little bit much. It does tend to do that on the pullbacks, but the MACD is still very strong, and stochastics at 70%, but it looks like the fast-moving average is above the slow-moving average. It's held the 9-period moving average. If you were to take a risk-reward chance, the problem is that it trades overnight and anything can happen overnight, so it could gap down. I'm inclined to say to you, everything about it based on the weekly chart says that this move that's just begun in the down channel that's been formed, it's actually a little clearer when I look at the contract itself, the continuous contract. This is way clearer. If I look at the continuous contract, the inside track buy zone hasn't yet been reached. It has been in the corn ETF. In this particular instance, here's what I'm going to recommend. I would probably say to you, because you like to have more confirmation about a trend being in place because you look at it in a longer term perspective, to nibble here is, it's a good place to nibble, because if it works, not only have we got a very good entry point, you've got the whole move from the 483 level. Let's go back to your particular instrument, CORN, trading at 36.46. You've got all the way from the test this morning of 36.24 right on the 200 period of the 9-period moving average to a new high, a recovery high of 38.13. That's a nice bunch of points. So this is what I'm going to suggest. I don't know if you're going to do it with options or anything like that, but if you're using this CORN, 2 Korean Corn Fund, I would start just a small position at 36.46 right now. Reason being, if it drops to 36, if it drops under 36, I don't want it. So for 46 cents, you really have the potential of $1, probably $2, or let's call it to be safe, $1.50 in gains. So that's a 3-to-1 risk. It's actually a 4-to-1 risk. I like that, and I'm going to suggest nibbling it here. If it gets to 37.10 to 37.18, I think that's your security. That's what you want to see. And if it does that, that's going to help the weekly close nicely by Friday afternoon. And we might even see a leg D by Friday if this thing can break into the 37.23 area. So a nibble right now. It's only a starter position. The monthly chart says, you know what, this is a very important moment. If it's able to rally, it'll be a counter-trend rally. I'd only treat it as a counter-trend rally. Based on the weekly, based on the monthly chart, because the counter-trend rally says it has to break above 38.85. That's the 200-period moving average in the weekly chart, and it turns out to be exactly the downtrend line that says that should be red. Actually, let me just double check. Yeah, I'm sorry, that should be a red line, red, and that's the resistance. And here is the breakout line. That's the breakout. There you are. That's exactly what I wanted. So the breakout for this particular contract over the next 3 weeks is a push into the 39.70s. Can it do that? It might take more than 3 weeks to do, but if it's able to hold, looking out, if it's able to hold 35.90, 35.50, and then move to higher high in the daily chart, that's going to be very good. A little nibble here, and I would start thinking about adding. Maybe call me Thursday and we'll look at it again. Thanks for calling, Mark. Thank you. We're going to be back with John and Philly straight after this. Basil Chapman, the Dow's now up 69, S&P's up 9.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. Trade what you see. And let's see. Now we're going to go to John in Philly. Hi, John. How are you?
Basil, thanks for taking the call. I appreciate it.
My pleasure.
Basil, I wanted to let you know I took a long position in the NASDAQ 100 index using the futures, and I wanted to ask you a question about the NDX. I know you sometimes look at the futures, sometime at the triple Qs. I would ask if you could look specifically at the cash index, NDX, because there's, as you point out many times, there's always sometimes minor Chapman wave variations.
Okay, let me just do this because for 1 second, and I'll have it all updated. Peak C, peak T, and I just wanted to see. I don't think that it tested it at 31.49.24, 31.47. Right, that's what I have. Okay, so yeah, your question.
Yes, well, just to let you know, yesterday in that severe setback, I made note of the fact that the NDX index at 3053 low held exactly the 3053 high of May 22nd. I was attracted to that setup. This morning, for the first half hour, NDX bubbled up and then set back between 10 and 10:30. I bought it there, so I am long NDX, and with tight stops. And I'm particularly interested if you could share with us what the Chapman wave count on the weekly is. I couldn't figure that myself. Wanted to see what the implication of your count on that chart says.
Okay, now I have alternate counts on the weekly, but I'm going to, just for the moment, because the Qs trade very closely, I wanted to mention that the Qs have a different pattern. I have a G/C as we stand right now. If I go to the NDX 100, I have to, NDX.X. I tell you what I'm going to do, and this is to me quite important. If there's a brand new wave count here, then it's actually very positive because it's peak B with a few days to go. I don't know if there's a chance of getting to 3149.24. I don't think there is, but you never know. That would be very important, and that would be very positive for the weekly chart. So let me just do this. Let's go to the daily for a second. I don't want to make it fuzzy, because there's something that I've spent a lot of time on. It's called the alternate instant restart. It is a variation of the instant restart. If I use that, we've got a leg D in the weekly chart. So this is where I set aside the letters and I say, wait a minute, let's go through this in a very methodical way. And what I like to do is to just grab my vertical line and I go to the last peak in the weekly and I say, at the peak of the 24th, week of the 24th of May, at 30,053.51, where was the MACD? Where was the stochastic? Then I grab the same thing and I say, at the last peak, whoops, not that one, it's this one right here. That was 646, right? Yeah, that's 3149, right. At that particular peak, and now I'm going to make it slightly, I'm going to change the color because I want you to be able to see it. I'm going to change it quite drastically because I only want to put it there to show what I'm looking at. I don't want to cover the bar. There you are. At this particular level here, can you see it? Yes, you can just see it faintly. At that particular level, right there, the MACD was higher, both in the fast-moving average and the slow-moving average. That's a big positive. At this particular point right there, the stochastic was, in fact, lower than it was at the previous high. That says to me, there's a divergence I need to take into account. So what happens in a situation like this is that I have levels to look at. In other words, I've got a G/C in the Qs, and I would have, if this was a brand new A, B, C, I'd have a peak C right here.
Yeah, could you label that, please? I'm watching the Tiger's Den, and I don't see what you're talking about. I'm going to take this away. Okay, let me label it. This is like a little Chapman wave study. This is going to go to an E right there, and that would technically be the down arrow. In fact, I'm going to do that. There's no reason why not. That's a down arrow. Then this, I would put a plus sign just as a starter position because it goes to F/A, G/B. We can't get an H, so this has to be a C right here. So that is C, and it allows, in this particular instance, a pullback. It's still a legitimate signal. It allows for a pullback all the way. I'd say that it could be a pullback to the 2955 area, and there could still be a sudden leg D to the upside. But here's what I'm going to do. In the techniques that I developed over the past, I would say, year and a half, I now very comfortably go C1, and if there's a fractional miss, which there was this month so far, of making a new high, I go C2.
Once I learned that particular technique, and I used it a lot, as you might recall, when we used to have calls from Peter when he was looking at the currencies, how many times we got it in the euro and many of the other indices, that peak C1, C2 failure pattern is a really good heads up to say, you don't have to be surprised at this particular point that there wasn't a D, because we've got a C2, peak C2. It has to be fractionally under the previous left side peak with the technicals failing. In this case, the stochastic is failing. So I'm now in a situation where I can comfortably say, yes, it could go to a D, but I'm not surprised if there's a much deeper pullback. And I don't have to worry about that particular index at this point. Why? Because I'm looking at the weekly chart, the daily chart, and my daily chart is a down arrow at peak D at the most recent high of 31.49.24 on the 13th. The rally that failed right there, if I use exactly the same technique, in fact, I'm going to do this, and I'm just going to change the coloring because then I don't have to take all this time. I'm just going to make it color gray, and the pattern will be dashed, and I'm just going to say format, and I'm going to say default. Good. So now I'm going to put the same thing here, and you'll see that we actually have a divergence in price and much weaker technicals. So now let me go through that. So I'm answering your question by saying I have a sell signal in the daily. I would need a close under yesterday's low. I need a close under 30 point. I'd have to under 30.50 to say that the daily has gone from a sell signal to a sell mode.
Yes.
Number one. I'm going daily to weekly. So my daily is the rudder. You're in your rowboat, you're in your little motorboat, and it's going along. The momentum is going at the same speed. Let's just say you're going at 5 knots. If your rudder turns, your boat is going to turn. It's going to turn at about 5 knots, but it's going in a different direction. The daily is the rudder. And I'm looking at this and I'm saying, okay, when the momentum kicks in to the down, if it kicks into the downside, I then can look at the weekly chart saying, you are the larger context. I need a lower price point to be able to get the same confirmation. And for me, a close below, at this particular point, a close below 30.29, the low of the week of the 26th of July, I'd immediately say, I have a sell signal in the weekly chart. Not yet a sell mode, unless the MACD, the stochastic goes under 80% and the MACD crosses negatively. But I could get a sell signal. How does it get changed? Now, if you don't mind, have I answered your question so far? Because there's something else I wanted to do as well.
Yes, you have. Thank you for that. I do appreciate that. Just as I'm watching you do that weekly chart, I'll just make an additional observation about that NDX weekly, namely, with yesterday's low, at least thus far, the 9-week exponential moving average has not been busted. So
it has not closed
my questions, and I'm all ears.
Okay, so a close below the 9-period exponential moving average, which is at 33,068, is one thing. I want a close underneath the low that we've just set, 30.53. That'll say to me, great. That's the second sign of a close below the 9-period moving average, and if the bar that follows doesn't take it back over it like it did back in June, was that June? Yeah, June the 28th, where the previous week it went under it and closed under it. The next week it was under it and had a fabulous candle. The following week closed above. I'm looking at it and saying, okay, that's going to be a failure pattern. Here's the other thing. If I look at Apple, let me show you what I've got. And I did this yesterday for my subscribers. I showed peak D on Apple. I can now put a down arrow because the MACD is turned down and the stochastic has closed under 74, under 80. I can put a down arrow. That can be aborted by a spike above it, and then I would put the little inverted V-shaped pattern if it's going to fail after that. But there was a round number 504, a low that we're looking at, It's trading at 492. If it closes above 504, Apple closes above that, I have to say, ho, 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 be careful. There's internal strength here. You could retest the highs of 513.74, recent high. But as I'm looking at it right now, the way the MACD and stochastic are turning down, the way the on-balance volume and the RSI turning down, it's saying to me there's a good chance that Apple, if it doesn't have to close, if it just touches 484 to 483 in the next 3 sessions or 4 sessions, that's going to be a negative. But it's saying, put that together with Google having made a peak D with a round number 928 all-time high, weekly a peak F, daily a peak D with a good chance of making a more serious peak D if it slides further. Amazon, if you look at Amazon in the Chapman wave, peak D with a 313 round number, and then a 313.62 high. 313 was the day after the high of the 26. 313.62, it is 313 round number. Plop, it comes down. So that's made a daily sales mode, a weekly sell mode, and a peak F possible in the weekly chart, in the monthly chart. That might recycle, but I'm treating it as a peak F right now. Put it together with Priceline, PCLN. You can see the heavies, peak E, top at 994.98, a gap up. The number of stocks that have made gaps to all-time highs or recovery highs in P, D, and E in the daily and then failed. Look at Tesla. I don't know. I haven't looked at it today. It made a round number high. The Tesla made a round number high of 173. So far, it hasn't broken it. I'm watching that real closely because if Tesla takes that 157, it's going to make a very important stock. It's going to make a potential peak F in the daily, a potential peak F. So far, there's a doji high in the weekly. I'm watching this closely. Look at, so Priceline I never finished because I got to the daily. Priceline peak D holding very well in the weekly, but it's still a peak D and only a leg C. That's the only way I can count it right now in the monthly. So it's still very positive in the monthly. So as I go through these very important stocks in all the different time frames, especially the NASDAQ, the big NASDAQ stocks. What am I forgetting here? I've gone through Google, Priceline, Amazon. I must be forgetting something.
You didn't go through the 4 biotech, Celgene, Amgen.
Well, I've got look at this. Celgene, if I can go through there. Well, let's look at the IBB, which is the IBB is the biotech. The biotech ETF, the iShares NASDAQ. Now, I have a sell. We happen to be short this particular sector. Look at this. It made a peak E with a round number 201 open at the high, the all-time high, went fractionally higher to 201.47. It plunged down to 187. I shouldn't say plunged. It dropped down to 187. Had that Amgen spike the other day on the 26th to 198. And now it looks to me like this is the technicals are right on the cusp. In the next 3 days, if it takes out today's low of 190.45, that's going to be a big negative. I'm watching the weekly that says there's a chance, based on the technicals, that this is a peak F, not a peak B. And the monthly, so far, I have to call it a leg F. So a lot of this is on the cusp. If you look at Celgene, CELG, made a peak F in the Chapman wave with a silent doji and a doji on the day of the high at 149.92. That's peak D in the weekly. Monthly is in a G/C. So on all the fronts that I'm looking at, we have a really good chance of looking at something that involves time. I'll be back with John straight after this. Hold on, John. Dow's up 70, S&P's up 9. Composite is up 24. I'll be right back with John and Philly looking at
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. Yeah, I heard the ad during the break, and I'm going to expound on that. If you go to the front page of TFNN, the virtual trading competition is going to be on next week, Monday. A week from Monday. You should sign up before Thursday, September the 5th at noon for the giveaway of $10,000 in cash prizes. Just lump sums. They're going to be given out. And check it out. It is based on the Nadex trading platform. Straight after this show, you've got Daryl Martin explaining the trading platform, how he uses it, how he's developed this beautiful program. Just check it out. It should be a lot of fun. You get a demo account that you can use. It's like a real thing, except it's a demo. Please check it out. Front page of TFNN. It's just, you got to sign up by Thursday, September the 5th at noon, because it starts the following Monday. You have to get the names in. There's a lot of paperwork that everybody here has to do before you can start your trading. So we need to have that done. So please. So we got John online, and I wanted to mention, John, there's another pattern. So now you are long the NASDAQ. And I'm going to suggest that on a very short-term basis is exactly the position. It's an inside bar so far. The QQQ is rising very nicely. If the NQU manages to break above the 9-period exponential moving average today, close above it, that's at 3,000, and it's being covered right now, 3,090. If it's able to get, so 3,083, up 23.50, hey, that's a big move. If it's able to close into the 3,096 area by tomorrow at 10 o'clock, if it's in that area, that's going to say, hey, this rally could go a little bit longer. That's number one. But number two, when I look at the QQQ, this is a pattern that I'm quite familiar with, this double cup formation. It's a failure pattern. It doesn't say you can't rally, but it's going to say at some point the Qs between the gap, if it even gets to the gap of 76.18, between 76.18 and 76.55, it should fail and start to come down. That's the way I'm looking at it. We'll see. So I hope that helps you, John, and thank you so much for calling, and I like to hear from you. We always have some really good ideas, and I hope I helped in a way. Had a quick question. The UVXY, where would a good entry be on the UVXY? That's the triple ultra short position in the let me just do this VIX. I'm going to go to the VIX as the root. The answer is we've made a peak C. There should be a peak D. I've got to double check. 1485, 1488. Yes, this is leg C. Now it's probably a peak C. I still think we're going to go to a D. I would not, at this particular point, the only time I'd look at it is if the volatility index gets close to 1560 to 1518, somewhere around there. Then you can use the VIX index, Trung, as an entry point for the UVXY. That's the way I would look at it. Otherwise, you really have a big risk. There was another question as well. Yes, thank you, Oda and the Dan. I'm just going to say this out loud because it's not something that I would do, but it's a really good idea. This is for Mark and Fort Collins on CORN. Was it for Mark? No, it was for... yeah, I think it was for Mark. Be patient with your bids if you're using options. Do not hit the offer. You can sell near-term out-of-the-money put spreads to fund at-the-money longer-dated calls. Using this method, if the coffee... Oh, that was for coffee. Sorry, it was for the call before. That was Franklin, Louisiana. Using this method, if coffee doesn't move for a month, your longer-dated calls are free for when it finally moves. If it moves right away, you make money on both trades. Your risk is $100 per put spread. Just wanted to get that out. That's my point of view. That's Odie and the Dan. Sounds like a good idea, but it's not the way I'd be trading it, so I'm just going to repeat it. Now, let me go through these things very quickly. I'll be back tomorrow, of course, for my usual show, and I'm hoping to be able to do Larry's show for the next hour after that tomorrow. But right now, what I'm looking at is the Dow has come off the bottom. It's trying to rally. This rally is an important moment because if the Dow is able to push higher into the close today and move tomorrow by mid-morning, then 14,975 would be the 9-period exponential moving average resistance. That's where I'd be looking. If anyone's looking for the volatility index or anything like that.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.